Hello and welcome. You are watching Business Plus here on News9 Live. A very good morning to all those who've tuned into this broadcast. I am Krishnakumar, and joining me in the studios is my colleague and friend Suyash. Maheshwari. Suyash, great to have you on the show this morning. As always, we begin with a check of how the markets have opened for trading in India. Talk to us, Suyash. Sensex, Nifty opening in the red for this morning.
Yes, Krishna, Sensex Nifty witnessed a negative opening in today's trade. Now, this was on the back of weak global cues. Now, we saw a 1% or 1.5% correction in all three US indices yesterday. Dow Jones witnessed one of his worst falls since March of this year. It was down about 1%, whereas Nasdaq fell about 1.5%. European shares also continue to be under pressure across the board, whereas Asian stocks remained largely mixed. So now the muted opening was expected, and Nifty opened below the 19,650 mark, which was the yesterday's closing price, and for a brief moment of time it dipped below the 19,600, which according to a lot of the analysts will provide near-term support. However, the markets have since bounced back slightly, and Nifty is currently sitting above the 19,600 level. Sensex is also trading below the 65,800 mark, so we are seeing about a 200-point correction on the 30 share index as well. The broader markets continue to remain buoyant. Mid cap and the small cap indices both are trading in the positive territory, up about 0.2 to 0.3% this morning. Whereas we have seen a spike in volatility recently. Nifty India VIX has spiked by about 2.23%, but sits below the 12 mark. Now, talking about sectors, Krishna, most of the sectors are trading in the red across the board selling. We are seeing, the banking index, the Nifty IT pack, also the FMCG pack and the auto sector all were down 0.3 to 0.4%.
Oh, goodness me.
Pharma was the outperformer. It was up about 1% in the morning trade.
Okay, barring pharma, which has been doing well for the last 6 months in India, is no story over there. FMCG, defensive like FMCG, also in the red this Wednesday morning. And also interesting to note that when the broader markets are in the red, you have the mid caps and the small caps in the green, sort of telling you, how to go about investing in Indian markets. When volatility, especially when volatility is so high, look for that value picks in mid caps and small caps. You'd say, Suyash?
Certainly, and we have seen a couple of weeks back when we saw 3 to 4% correction, in a single day. A lot of the analysts were saying, that the Goldilocks situation of the broader markets is over. It's time to, perhaps look at large caps. But since then, we have seen a complete turnaround. Nifty mid cap and the small cap indices both have continued to outperform markets on a daily as well as on the weekly basis. Even today, we are seeing the market is largely directionless in the last 3 days. Right. But mid cap and the small cap indices, both slowly and steadily, they have been climbing all walls of Ari.
All right, so there you go, a clear message coming in as far as the markets opening for trade this morning is concerned. Suyash, we can also quickly, in these kind of market scenarios, we can't repeat enough the importance of stock picks. Yes, of course, Nifty mid cap and small cap tells you which area to look for, but what to look for. It's always about the specific stocks, especially in action this morning, Suyash.
Yes, so among the stocks that we were tracking this morning was Aditya Birla Capital. Now, Aditya Birla Capital yesterday said that it will invest about 750 crores in its wholly owned subsidiary, NBFC Bank. Aditya Birla Finance by subscribing to its equity shares on a rights basis. Now, investment will be made the investment that will be made by Aditya Birla Group will go to fund the growth and capex requirement of the group. Now, a very interesting news coming in this morning. Right. Also, we have seen a reaction on the stock price. I think the stock was trading with marginal gains this morning, and we have seen in the last few weeks or so a lot of these NBFCs trying to bolster their balance sheet in the light of Jio Financial Services entry into the segment, which has created at least an environment of increased competition. Right. Even with Bajaj Finance, we have seen in its upcoming shareholder meeting on October 5th, the board is planning to raise funds, and according to reports, they could raise as much as $1 billion from the market. So, it seems like a lot of NBFCs are investing in themselves. They are, bolstering their balance sheet, creating that war chest to, fight off that competition that will emanate from the entry of Jio Financial Services.
And so is Aditya Bill Capital as well. So it's doing what needs to be done. That's what other companies do when Reliance enters the market to disrupt the situation. But that's one of the big stocks in focus. We'll quickly now take this across to our special market guest who joins us this morning, Aamar Singh Dio of Angel One, who joins us. Thank you, Aamar Singh Dio, for taking time out to be with us this trading morning. Talk to us. Sensex, Nifty, both opening in the red. But Nifty mid cap, Nifty small cap in the green as always.
Yeah, I would say that what we are witnessing is that there's some sort of consolidation happening in the large caps, and that is clearly reflected in the way Nifty has been trading over the last few trading sessions, because it did manage to break its all-time highs and then trade substantially higher above that, but currently it's trading below that. So we can say that a top has been made in Nifty in the short term. Because till the time we don't see Nifty sustaining above the 20,000 mark, I would say that it could be in for some consolidation as major support for Nifty on the downside. I would say currently it's around those support levels. So 19,500, 19,600, that's a very crucial zone of support, technically speaking, from the market's perspective. And also what we've been witnessing on the derivatives data is that we've seen that short build-up has been happening over the past few trading sessions. So as you rightly said that in spite of the Nifty, we are witnessing some selling pressure. We've seen some good up moves in the small cap and the mid cap, and that is there to stay. But it's going to be more, I would say, stock specific rather than across the board. Also, if you look at the advanced decline ratio for today, so that's more or less evenly balanced. But the good point is that overall, if you look at the trend still continues to remain positive. But yes, there are some global concerns coming up, the way crude oil prices have rallied significantly, trading above the $90 mark. If it sustains above that level, then that could have some concerns with regard to rate hikes and rate cuts and all that. So those, I would say, thoughts are definitely playing not only in the minds of Indian investors, but global investors as well. And that could play a spoiled sport. But overall, the trend, technically speaking, the trend remains strong and positive. But yeah, we are witnessing some consolidation, and also consolidation is a healthy sign in any bull market. So that should be taken positively, because that gives an opportunity to buy stocks which one has missed.
Now, Mr. Singh, the IT pack, which was, framing some sort of a comeback after a muted start to the financial year, was once again came under pressure after, US Federal Reserve gave a narrative that, higher interests are here to stay longer, and perhaps there will be another rate hike in the November policy meet. So, and today we are seeing that Morgan Stanley has, initiated buy call on some of the IT stocks. So, how are you seeing action going in the IT pack? Is it a buy? If so, what are some of the stocks that perhaps one can look at this point in time?
Yeah, as you rightly stated, what we are seeing in IT pack is more of some sort of consolidation and profit booking, because earlier there were serious concerns with regard to the recessionary fears in the US. So that seems to have somewhat been very well factored in by the markets, even by the IT sector. So currently, if I look at the IT stocks in terms of, I would say, the large caps, so Infosys is one stock, I would say, more or less in for consolidation. I don't see much of a rally between 1400, 1600. That's a range one can see. L&T Technology, however, is in a different zone and space altogether. So this is one stock technically continues to remain strong and firm. It hasn't corrected much in spite of the market correction. So that also speaks volume about this stock. And the stock is still to breach its all-time highs. So this is one stock which on any dip and correction can be used as a buying opportunity. Then I would say apart from that, if I look at other major stocks, so Persistent is also falls in that similar category. We've seen the stock significant rally and holding up in spite of the market correction. It's trading at record highs. So on any significant correction, this is one stock one can look at. Talking about the large cap in terms of TCS, again, TCS and Infosys, they fall in the same category, because if you look at TCS, what we are seeing in TCS also, it's more of consolidation between 3,300 and 3,600. So it's currently around the 3,600 marks, slightly below that level. So one can look at it from a trading perspective, and I see that IT sector, if you ask me, so it's more of a mixed bag right now. So from that perspective, but these are a couple of stocks which one can definitely look at, which I talked about.
Now, Mr. Singh, I also wanted to touch on the fears of recession that are starting to brew once again. You said that, earlier in the year we saw some pressures, but about, recession, perhaps US markets falling into recession probably by the end of the year or the start of the next financial year. However, the concerns have cooled off since then. But Jamie Dimon, the CEO of JP Morgan, yesterday, I think I was reading one of his reports, he said that US markets could face a stagflation sort of a scenario in the next few months or so. Even the data points that are coming out over the last week, couple of weeks or so, the new home sales data, the consumer confidence data, it seems to be missing the street's estimate. So there is at least from data's perspective, there seems to be a slowdown in the US economy. So do you expect this stagflation sort of a scenario playing out, and what could be the implications for the broader markets and perhaps Indian equities also?
I would say that this year, starting I would say from the mid of June till next year, is going to be very crucial for the US as a nation. Because they'll be having one of their, I would say, most interesting presidential elections next year. And a lot depends upon how the current government in the US, that is the Democrats, how they are able to manage the US economy. So they would be making all efforts out how to at least sustain the industry, because that's going to really define whether they come back or not. So that's one major factor which is going to definitely play in. And also, if we go and look at historical trends, what we've seen is that generally the first year and the last year, they generally are stronger in terms of the pre-election year. So from that perspective, the government would want to do whatever steps they could take. But US being more of a free economy, how much the government could do, that also is a concern. But yes, as you rightly said, I would add to it that I've spoken to it earlier also about that crude oil, because that's one major energy I would say driver across the globe. So sustaining above the current levels, so between 90 and 100 will definitely cause a lot of pain, not only in the US but across the globe, and that could effectively tie down the hands of the central government. So if some central banks, they wanted to maintain status quo, if they wanted to look at a rate cut, at least that would be a strict no. Given if the crude oil prices continue to trade above the $90 mark. So that's one major, and that, as you rightly said, some of the data points clearly point that which are not reflecting the strength of the US economy. And also, if you look at the US markets, we've seen that it's more of consolidation. It's some of the stocks, heavyweights, which have really held up the market. Otherwise, we could witness some selling pressure, and also we are seeing some consolidation there as well. So investors globally, I would say, would be more cautious, because the risk reward ratio is something one definitely the smart money looks at as to what's a risk versus the reward. And but the good part is that markets are not factoring in any unexpected negative news as of today, because if you look at the India VIX or the CBOE VIX, they are within a very reasonable limit. So that also shows that investors are overall comfortable given the data flows that have been coming, and also that's more on expected lines. So as long as the data is on expected lines, I don't see much happening. We could see some consolidation in the markets till the time we see some trigger which is unexpected that comes out like a bolt from the blue.
Mr. Deo, there's another very interesting development that is going in the market now. NSE is proposing to add another trading session between 6 p.m. to 9 p.m. for the FNO for the FNO segment. Now it has received mixed responses from the community. Some say it will benefit traders as they will be able to price in global sentiment or global news much quicker, whereas others are saying that it will only add to their stress, and for the same pot of money you will be working for more hours. So what is your overall view, sir?
Yeah, that's a very good question, because see, what happens is that the answers or the feedback that comes in is based on the market participants' position, as well as the the opportunity. So having said that, if you look at global markets, we are very much on integrated markets today. So what happens in the US and the Dow Jones and the Nasdaq, that they have an impact. There's no denying the fact that they have an impact on the Indian markets, on Asian markets across the world. So we'll have to watch out for how this really works out, because as you rightly said, that there's a move to this extent. So this could work both ways for those who would see it as an opportunity. They get an opportunity window again, because that's the time wherein, if you look at commodities also, if you look at commodities, you'll find that major commodities, be it gold, be it silver, be it crude oil, they see a significant portion of their volatility during the late evening hours because of the US markets timing. So the Indian markets also, if they are open and they get an opportunity for investors, present an opportunity for investors. So yeah, it will be looked at both ways, but yes, it will also increase the timeline for the markets. So how my different market participants are going to take that, that's something which we need to see. But effectively, it could give an opportunity for investors and traders to look at and track the US markets and see how that impacts the Indian markets.
Now, sir, what do you think would be the next step? Can we also see more, the number of derivatives contract on stocks also increasing perhaps over the course of next couple of years or so?
Yeah, that window of opportunity will definitely be there, because what we are seeing here is that overall, the number of stocks which are getting listed, the number of the volume, because ultimately it all boils down to the volume, how the volume is increasing in those particular stocks. So if they cross a threshold limit, then we'll see that more stocks are included, because sometimes we see that the F&O stocks, if I look at them, roughly around 185 stocks would be there around that level. So sometimes we'll find that the number increases. So that opportunity will definitely be there, but that will be more a factor of the other players, other things like how the volumes play out for those particular stocks, because that's going to be the deciding factor for the stock's inclusion in the F&O category.
All right, Aamar Singh, Dio of Angel One, joining us this morning with, of course, his perspective on the opening of the stock markets, and of course, fractional investing, and of course, extended trading hours as well. Lots to discuss this morning. Thank you, Aamar Singh Dio, for taking time out and speaking to us, and hope to keep having you on the show again and again. But for now, we'll let go of you, and of course, let go of Suyash as well. Suyash, thank you so much, as usual, for putting the day's morning market action into perspective.